As the markets were in free fall, the government swung into damage control mode. We spoke to Minister of State for Finance Jayant Sinha to find out what the government's message to panicky investors was.
What is happening is very clearly a global downdraft in equity markets. It started on Friday when the S&P dropped over 3%, which is a very, very large decline in the US markets, and that was obviously then mirrored in what we saw happening in Shanghai and Japan when markets opened. So under the circumstances, when there is this kind of a global sell-off and there is an adjustment in equity prices around the world, and people are redeeming funds from emerging markets across the board, it will naturally have a significant impact in India as well. India, whether you look at the equity markets or you look at currency prices, India was in line with all the other emerging markets. You obviously have to look at it in comparison to other markets, because markets have to be looked at in a relative way. And again, if you look at markets today, if indeed the currency had weakened more than other markets, or the equity markets had dropped further than other markets, then we could have blamed it on government policy making or some India-specific factors. But what we've seen today is that the Indian market has moved very much in line with all the other markets. And in fact, if you look at what experts are saying, or what some investors are also saying, everybody is saying that this is a significant buying opportunity in India, because while there's been indiscriminate selling around the world, this enables you to now take favorable positions in markets or countries where the prospects are much better than they are in other.
Jayant Sinha there trying to talk up market sentiment. The good news though, or the sliver of hope, is that the Dow Jones has opened a short while up. It's actually up 1%, indicating that there could be good buying opportunities amidst this chaos. I want to go across now to Rahul Goyal. He's the CEO of Equity Master. Equity Master is a firm that advises investors, small investors especially, on how to handle their investments in the stock market. Rahul, welcome. 7 lakh crore rupees of market capitalization wiped out in one day, the third biggest fall in the history of the stock market. Do you expect things to get worse from here, or will they start recovering?
It is a bad day, and it's actually a worse day for people who were not well planned in their investments. So, at any stage you're going to have two kinds of investors. One who have a well thought out asset allocation plan, and the others who are trying to ride the market waves. So the ones who were riding the wave took a very bad hit, and the ones who were following a plan, they took a hit, but not much. In fact, I would suspect that a lot of the people who are well planned are probably rubbing their hands and saying maybe this is a great time to buy.
Rahul, the critical question at this time is, Rahul, the critical question at this time is, have we seen the bottom of this pit? Do you expect things to pick up from here, or do you think that things are going to get a whole lot worse before they start getting better?
So, two questions in there. Is it over? Usually these things don't go over in a flash. If you are a smart investor, you'd probably plan for this to last a while. So if you are liquid and you're looking at buying, you'd probably spread out your buying over a period of time, as against just buy everything tomorrow morning. So you would not do that. You mentioned about a bull run. I think that's something we're thinking over, that whether we are in a bull run, it has been a bullish environment, but there's not a lot of money that people have made from stocks. And that's because a lot of the rally really happened pre the current government, pre-Modi, and those who bought stocks after Modi came in, I'm not sure they are a very happy lot, and after today they're not happy at all. So the advice and the opinion really is that, or rather, let me give you another data point. Everyone's been worried about gold, right? But the people who bought gold today may be feeling like rock stars. People who put some money in a FD must be feeling like rock stars, people who bought a little bit of sensible real estate must be feeling like rock stars. So, you know, it's all about allocation, and I'm pushing the point, I know that, but if you've planned well, if you've allocated well, I think bull runs will come and go.
Okay, Rahul, tell me, how much of the fall that we're seeing now do you attribute to global factors, and how much how much of it has to do with growing unease amongst foreign institutional investors, especially about the slow pace at which the Modi Sarkar is pushing the economic reform agenda?
See, a lot of it is global, there's no doubt about it. You know, India's got a fantastic future, but a lot of parts of the world look very, very shaky to begin with. In India, it is either you're going to grow at 10, and the disappointing number is you'll grow at 5, 6, 7. That still leaves you as one of the fastest growing economies in the world, right? So I don't think that's a problem of a lot of internal. Internal is just managing expectations. It's the external which is hitting us. And you know, the point about are people getting nervous and they're selling off, but that's what usually happens, right? Something triggers and now everyone's going to be riding the wave down. But I'm hoping, and this is a hope, we built Equity Master 20 years back hoping that people will become smarter investors.
Okay, tell me, Rahul, before I end this, what's your advice now? Because people, of course, are very concerned about the condition of their portfolios, and they're wondering whether they should evacuate the money they have in stocks in panic, stay invested. If they have some liquidity, look at entering the markets at these levels because the prices are much lesser. Do you see buying opportunities? How would you advise investors to deal with the current situation, Rahul?
See, firstly, this is not a common phenomenon. The stock markets every few years go through such crashes. What usually gets wiped out are the speculators. The long-term investors usually see these opportunities as buying opportunities. If you, since morning, you know, you pick up any TV, any newspaper or anywhere, a website, everyone's saying, do what Buffett does. You know, buy when others are fearful, you sell when others are greedy. So, you know, that's a great thing to remind yourself. But there's one thing which I asked my colleague Rahul Shah, who was the co-head of research at Equity Master, and I said, are you excited by what's happened in terms of, are you seeing a lot more buying opportunities? And he said no. He said there are stray buying opportunities, but broadly, the market still looks a little expensive to him.
Okay, I'm going to leave it over there. Rahul Goel, for joining us in the newsroom with your thoughts. Thank you very much.